Hi everyone, this is Mrs. V. Chen. Welcome to my Form 4 Foundational Accounting lesson number 6. So today's topic is income statements. So before we look at income statements, let's look at accounting cycle again. Alright, so the first step, we do journal entries, and after that we post journal entries into the T accounts or ledger accounts. And then after that, we come to trial balance. All right, and now we have income statements, which is step 4. And then finally, we have this statement of financial position. Okay, and actually for this step 4 and step 5, we also have another name for this 4 and 5. We call that financial statements. Okay, so far there are 2 financial statements. So one is income statements, one is statement of financial position. But in today's lesson, we will focus on income statements. And also there is another name for financial statement. We call it final accounts as well. Because step 4 being the income statements and step 5, statement of financial position, being the final steps in the accounting cycle. Okay, now we come to income statements. There are 2 parts in the income statements. One is the trading accounts, one is the profit and loss accounts. So therefore, in the old syllabus in Hong Kong, we use another name for income statements, which was trading and profit and loss account. All right, so now let's look at the trading part. So what do we calculate in the trading accounts? We calculate gross profits. Okay. And then what do we calculate in the profit and loss accounts? We calculate net profits. And what is opposite to net profits? So, which is net loss. And then next I'm going to give you formula for this gross profits. Okay, so here is the first formula for gross profits, which is equal to net sales minus costs of goods sold. All right, so this is the formula to calculate gross profit. So what is meaning of trading? Trading means buying, selling, buying, selling. So what do we buy from supplier? We buy goods from supplier, and then we make sales to the customer in order to earn profits. And the profit we earn from trading, we call that gross profit, and the formula is net sales minus costs of goods sold. Okay, and next, what is the formula for this net sales? So net sales is equal to sales. Remember what is sales? Sales means that we sell goods to customer. Okay, so what happened when we have customer? They are not satisfied about the products purchased from us, so we allow them to have returns inwards. So and then we can use double entry to explain that as well. Do you remember what is sales? Sales is a credit item, right? And what about returns inwards, which is a debit item? So since these 2 are on the opposite side, so we can see this return inwards will deduct sales. So that's why we get this net sales, which is equal to sales minus returns inwards. Okay, next we come to the formula of cost of goods sold. Okay, I draw this diagram to explain to you what is the formula of cost of goods sold. Let's say this is year 1, we start our business. Okay, so to sell things to customer, we must go to the supplier to buy goods first, so that therefore we have purchases here. And assuming that we buy 1, 2, 3, 4, 5 boxes of goods, all right, during the year. Okay, and then we make sales to customer, and then we realize that we have 2 boxes left. Okay, and these 2 boxes left not being sold to the customer, we call that closing inventory. Okay, so in that case, you can see how many goods being sold to the customer. So we start with 5, we buy from the supplier, and then we minus 2 left, so that how many sold? So we sold 3 boxes. All right, so here we have the formula to get 3. Okay, so this is closing inventory in year 1 will be move forward to year 2. So this closing inventory will be opening inventory all right, to begin with in year 2. So we call this opening inventory. All right. Okay, so let's say in year 2 we start with 2 boxes of our goods. However, this is not enough, so that we need to go to supplier to buy again. So we need to add purchases. So that means we go to supplier to buy again. Let's say during year 2 we also buy another 5. All right. Okay, so let's see how many units of goods we have. So this is 2, and then plus 5 here, we get 7. All right, and then we go to count against how many left, and let's say we have 3 left. So what do we call this 3 left? We minus closing inventory. Okay, so this is 7. 7 is 2 at the beginning. Buy another 5, we get 7, and then minus 3 left, so that we sold 4 in year 2. So therefore, we have this cost of goods sold formula, which is equal to opening inventory plus purchases and minus closing inventory. All right, and how do we get this closing inventory? We go to the warehouse and just count how many units left, and then we call that physical stock taking. And the closing inventory, which is not yet sold in year 1, will be opening inventory in year 2. And again, in year 2, we also go to the warehouse and then we count, we do physical stock taking to get this closing inventory. All right, so this diagram is to explain the formula of cost of goods sold, so which is equal to opening inventory plus purchases minus closing inventory. And now I'm going to write it in formula in this way. So number 4, so costs of goods sold is equal to opening inventory. Actually, the purchases should be a kind of net purchases because we need to add something affecting purchases, and then I'm going to explain to you soon, and then minus closing inventory. All right, so that here I have another formula to work out net purchases. So we start with purchases, means what? We go to supplier to buy goods, but sometimes we need to pay transportation cost to bring goods from the supplier to our warehouse, so that which will increase cost of goods sold. So we call that carriage inwards. Okay, so why we add carriage inwards here? Because this carriage inwards, which is a kind of delivery costs that we have to pay, which will increase the cost of goods sold. All right, and then minus, so what about after purchases? If we are not satisfied about the goods purchased, then we can do this returns outwards to the supplier. So here we have formula of net purchases plus is equal to purchases plus carriage inwards and then minus return outwards. And the new thing here is carriage inwards. Okay, I will explain this to you later. Okay, so therefore from number 1 to 3 and then 4 and 5, we have finished all the things in the first part, which is the trading account, which is used to calculate gross profit. Now we're going to move on to the profit and loss account to calculate net profits or net loss. So here, number 6, I have the formula of net profits. Okay, so we start with gross profit that we work out in the trading account, right? So the good things to the owner will be revenue. Therefore, we add revenue to gross profit and minus all the expenses. Okay, so if this figure is smaller than expenses, we don't make profits, then we make net loss. Okay, next we can come to some of the example about revenue. Do you remember what revenue we have? Like we have discounts, received it, remember that, which is a credit item. We have discount received it from creditor from supplier if we pay them earlier. Okay, and what about expenses? Okay, we can have discounts allowed to debtor, to customer. If customer pay us earlier, and of course we need to pay rents for expenses, we pay salary and wages to our employees, right? And also we may need to pay electricity, for example. And also we have this carriage outwards. Okay, so there are two things. So carriage outwards will be a kind of expense in the profit and loss account. However, carriage inwards will be the item increasing cost of goods sold, and then we put this in the trading accounts. Okay, so we have two items new here. So one is carriage inwards, one is carriage outwards. But anyway, all right, for both items we need to pay money. All right, so pay money, we can pay cash, we can pay check. If we pay cash, that means we have less cash in our firm, so we credit cash, and then we have less money in the bank. So both situation, credit cash, credit bank, means we pay. Okay, therefore both of them, carriage inwards and carriage outwards, they are debit item. They are debit item, right? But which one will increase part of the cost of goods sold? So which is carriage inwards. We put carriage inwards in the trading accounts, right? Because this will add to purchases. And the meaning of carriage inwards is a kind of transportation costs to bring goods from the supplier to our firm. Okay, so this is debit, carriage inwards, and then we put this in the trading account and we add carriage inwards to purchases.